So before I talk about the setup for this week, talking about the events coming up ahead and the trades I like, I kind of want to take a small leap, to my 50,000 foot view and get to the macro. Right? As a trader, we go from the macro, then we talk about sectors, then we talk about individual companies, and then we look at the trade setups. Right? And we go over the catalysts and stuff. That's usually the how you should do your analysis. You work your way down. If your macro is wrong, the stuff below that's not going to really make sense, right? Things aren't going to really add up the way you expect. So I think it's important to revisit this because, you know what, before I even break this down, let me just say the dollar milkshake theory is something that you should be aware of. And I'll include a link to that down below. If you don't want to watch that, I think it's only like 6 minutes long. I'll provide a small summary. All right. We exist in a global economy, okay? The U.S. exists relative to all other economies. The biggest investors in the central banks evaluate where they want to put their money, not on a domestic level. They don't do stock picking. They look at things on a global level, and they control the most money, right? Same with the banks, not even just central banks, but your banks, U.S. Bank, J.P. Morgan, Goldman Sachs. And when you have an environment where the U.S. might be in a slight decline, but it's still strong. Everyone's talking about a recession. When I look at the data, I still don't see a recession. And we had some famous indicators even say recession, but since then we've gotten positive data, which isn't what you want to see as a confirmation of that. In fact, it kind of nullifies those signals that we got previously, right? And the market's also rallying up. So the idea of the dollar milkshake theory is that the U.S. dollar continues to climb. Okay, and what's important to understand is that there's more in the euro dollar market than there is in the dollar market. Euro dollar basically is U.S. dollar denominated debt. What does that mean? It means if foreign entities want to pay off their U.S. debt, they have to get U.S. dollars. And the debt market is bigger than the dollar market. And that means that they all have to print their own currencies to buy more dollars. And if you're already in a global economic environment where the U.S. is doing better than other economies and they start doing it worse, the U.S. becomes a safe haven and the U.S. dollar becomes a safe haven. And it also causes a squeeze on U.S. dollar price and the price of U.S. assets as everyone rushes into them. So you have to understand that in a global environment where there's wars and turmoil and currency explosions, China, you might say, is doing well right now. But remember, there's a difference between a rebound in that prices of assets and an actual real change in the health of the economy, right? China isn't doing stimulus because things are going great. They're doing it because things are kind of falling apart. They have a window here where they can do it. I thought they would do it while the dollar was dropping. Instead, them doing this is causing the dollar to squeeze higher. And by the way, we can see also that China is one of the biggest buyers of U.S. dollars. We're kind of seeing the dollar milkshake theory play out. And it's been playing out for a few months, but it's really starting to play out on the charts where people are saying, where's the crash? A month ago, it looks like the technicals were starting to fall apart. And in some areas like tech, they kind of are. But when you look at the strength in the SPY, it just looks like a rotation, which makes me want to say at this moment, it looks like we could be entering an environment where 6 months from now, we're talking about being concerned about the market being at all-time highs. And that ends up being a conversation that I have week over week over week over week over week for 6 months. I'm like, stock market's at all-time highs, but I would be concerned here. And I might turn into just a broken record saying that. So that is something you have to keep on your radar, right? We could enter into a recession, but if we're stronger relative to other economies and global turmoil keeps getting worse and we still look like the favorite pick, the all-star pick, the first in the draft, all the money's going to flow into the U.S. And it won't make sense to the economic experts, to the, financial gurus, to the novice traders who have not properly developed their macro framework, because they only exist in a domestic point of view. And when you do that, like think back to COVID, all the people were saying that the dollar's dead because of all the money printing. The dollar's not dead because when you want to talk about the value of a currency, you have to talk about it in relative terms, right? That's why, if you go to Forex, it's an exchange market. What is the dollar worth compared to the pound? What is the dollar worth to the yen, right? You don't just talk about what the dollar's worth. It's only worth what it is relative to something else, right? So if you want to build that macro framework and you want to try and make sense of what's going on right now, you have to understand that the global economies are tightly intertwined, all right? So keep that in mind, because that's what I think is starting to play out, and it's a big concern to have. And if you're looking for where the break is, that's where you want to be watching, all right? More than ever, it's important to keep an eye on Japan, keep an eye on China, keep an eye on Russia. And I know the Middle East is a weird one. It's kind of a wild card. We haven't really seen the market react to it. So the market doesn't seem that concerned. And I would even push that as far as to say that probably there's upside risk rather than downside risk. If there's some sort of de-escalation that occurs from, basically the funders, Russia and US, who are basically funding this war, if they decide, okay, time to pull back and de-escalate these tensions, that could actually cause a squeeze to the upside. And I've been talking about that for a minute. Think about Friday when that good economic data came in. The risk isn't to the downside right now because the market's priced in so much downside. The VIX is persistently high. The market is extremely nervous. So any good news is going to cause these squeezes higher, right? Last week was a very tough week for trading. Wow, tough week. So many traps. Go watch last week's report. I told you it was going to be a rough week. It ended up being a rough week. That's okay. Sometimes you're in survival mode. And as long as you can survive, you can be there when the good opportunities come, and then you can thrive and you can ride them. You have to know where to pivot, where to move, and be nimble. And I think this week we're going to get a lot more clarification. So let's go ahead and break it down, talk about the week. Make sure you save this video. Make sure you save that Dollar Milkshake Theory video. It's so important to understand this stuff, all right? Without further ado, let's talk about the economic data this week. So actually, now that I'm looking at how that took 8 minutes, I'm going to make a whole separate video for the weekly report. So make sure you subscribe, like the video, click the alert bell. Weekly report will be out later tonight.